Good afternoon, financial professionals. My name is Jennifer Nadeau, case design specialist here at E4 Insurance Services, welcoming you to The Brew, building relationships every week. Thank you for tuning in today. And for those of you joining The Brew for the first time, welcome. We like to start the Brewcast by celebrating what today's National Day is. And first and foremost, today is National Pearl Harbor Remembrance Day. It is also National Illinois Day and National Cotton Candy Day. On today's Brew, we welcome E4 Insurance Services' very own wealth strategist, Bill Anderson. Bill will be sharing with attendees the benefits of helping clients with repurposing life insurance contracts. So we'll have a great discussion there. Feel free to use the chat box to share your thoughts or ask questions. And as always, all attendees are in a drawing for a prize, and we will be announcing the winner at the end. Thank you for tuning in. Bill, thank you very much for tuning in today. It's great to have you back on The Brew. Love having you.
Nice to be back. Thanks, Jen.
Wonderful. So we know, you and I know, and I know that your colleagues know that you have many, many years of experience within the industry. And I know that when I have you on it, it kind of feels like two veterans sort of having a conversation about what's going on in the industry, with the benefit of other people being able to listen in on our conversation. And in the intro, I described your topic as helping people with repurposed life insurance transactions, policy reviews. So is your talk today, is it about policy review? Is it about more of probing into the goals and objectives of clients, or is it a little bit of both?
Well, first off, that many, you just need to say that once.
Well, I was going to say age, but
Yeah. That's classic. Yeah, it's really all of it. So it's policy review. It's when's the last time you refinanced your insurance, right? There's so many good ways to say it, but really, Jen, it's about, looking at an old policy, and within that old policy, where does it sit today? Right. And so, yeah, ultimately we get to what are people's goals, what are their values, what are their objectives with the planning, right?
Yeah. So goals, objectives, yes. What do you mean by values?
Well, we talk in that third party dynamic. When you bring us, your E4 specialist, if you will, into a meeting, we have a way that we can talk about that big ugly word death. Right. And the planning that goes along and people's goals and values. Right. So I think of a lot of the financial planners I work with in today's world. The closest they get to death is your financial plan ends at age 93 and 95. Everybody knows what they're talking about, but what are the goals? What are the values? What are they trying to accomplish when they ultimately pass away? And then the third party dynamic with us in that meeting with you, we're able to literally ask that question, and they usually tell us. And they will sometimes give us copies of their wills and their trusts and all that sort of stuff so that we can get into the planning stage right there.
Excellent. So how do you get the conversation started?
Oh, basically, I mean, first off is identification to the advisor, right?
Mm-hmm.
So who's your favorite client with an old policy? Did you position that old policy, or was it somebody else? I.e., did you sell it to them, right? We're really looking for policies that are 7 or more years in age. We're usually looking for $50,000 to $100,000 of cash values. We can do this analysis with term insurance too, but when we're really looking for a policy review, what were their goals? What were their values? What were their objectives 7 to 10 to 20 years ago? And guess what? Have they changed? And yeah, they do change. And then in the client meeting, what are we really saying? It's like, hey, you got this old policy. What do you have it for? And it's more of an open question to let the client just spill it out to us. And when they do, then we know which avenue, which angle we're going to take, right?
Yeah, excellent. Are you okay if we move into a case study at this
Yeah.
point?
Yeah.
All right. And you and I know we talked about this before. And in this particular case, just to set it up for everybody that's watching, it started as a protection solution, and then it moved into accumulations. And one of the reasons that I mentioned that before we really dig in is that within this analysis, if you will, that we're going to go through, we're going to use the same funding and the same death benefit. But the big difference here is there was a huge increase in potential cash value accumulation to the client. And within this particular case, I believe the target increased from 45,000 to around 90,000. And again, that was with the same funding and the same death benefit. So I'm just going to sneak over here and share my screen.
And as you're sharing that screen, I'll just add, this looked like a good case from the advisor sending to me a copy of the enforced ledger. So we went ahead and we did the informal underwriting. It came back and the offers were a little different than we expected, because this 55-year-old client made the decision to become a student pilot. What does that do to an insurance contract, right?
Yeah.
Regular pilot is different than a student pilot, because student pilots are, well, they're in training, right?
Right.
So, I'm like, oh boy, is this going to work? What's going to happen on this case? We got on the phone with the advisor, and literally he brought up the old policy enforced ledger and the cost of insurance, because within this illustration that's on the screen, we always go into what are the policy charges and fees, right? And we get to the cost of insurance. What's interesting, as a student pilot on a new contract versus his old contract where he was preferred non-smoker, the cost of insurance was identical. So did it still make sense to move it over? It did, because of how the policy was performing. So what's on the screen here is where we came out of that tentative underwriting. And I am ready, and we're having this call, we're doing a Zoom call, and we're saying, hey, here's your 1035 coming in on the outlay in the upper left-hand corner, continuing to put in 33,500 per year. And the insurance amount was locked, 2.35 million. The goal of the client, he wanted that amount of death benefit. But in the conversation, we discovered what he really wanted was the ability to drop that death benefit down the road. And as he dropped that death benefit, to have the cash value grow even better, and then maybe turn into a LERP or a super Roth type of income. And if you're curious about those ones, you got to watch an earlier brew from the record
on the brew blog. Yes.
Blue blog, that brew blog. Yeah. So anyways, there was some magic that Jeff, the advisor, said in the meeting. And when we hung the phone up, I immediately called, Symetra is the case on this one. I called up the Symetra wholesaler, friend of ours, and it's like, Brad, we need some help. Here's the situation, here's whatever. Can you run some other numbers? Because if you don't know this, in the industry, you have accumulation products and you have protection products. Accumulation products are the design of cash value. Protection products are all about death benefit. What's on the screen is the protection product. That's where we thought we were. Jen, go ahead and share the next screen, if you will, and show what actually happened on this. This is literally showing the accumulation product. And then we literally went into this and looked at the comparisons, right? So what's interesting about protection products in the industry, they tend to have 15-year back-end surrender charges. They also tend to have lower ceilings, which creates a different or lower AG 49A apples to apples comparable number. So what's on the screen, you're seeing this. Now, Jen, go ahead and forward this out if you could from what we had practiced or looked at. Look at those AG 49A rates. So on the protection product, you're at 4.93. And I didn't finish that sentence earlier. On accumulation products, you tend to have a 10-year back-end surrender penalty and a higher ceiling. So the AG 49A rate is actually 6.24.
Mm.
So now let's look at the cash values.
Well,
Watch
if you
what this
don't
does.
mind, Bill,
Yeah,
for
go ahead.
1 second,
Yep.
training is my background. So I always like to take a step back and just give people that may not be familiar with IUL or AG 49A
Oh,
what that is. And back in 2015, there were some regulations put forth within the industry about illustrative rates on IUL contracts. And then there was another reg put out from 49 to 49A that really just level set caps within IUL illustrations and illustrative rates. So sorry, Bill.
right. No, that's great. Thank you. Thank you for explaining that. So what the industry is doing is it's setting everybody to equal, right?
Yeah,
With
level
the
play.
49A, AG 49A regulations. So these are really comparable numbers, right?
Yeah.
So
Yeah.
watch what happens on the cash values and don't pay attention to the policy value. Look at the net surrender value column. So this is the protection product, right? So you put in all that money, and I mean, in 10-year summary, you put in 588, it's worth 502. It's like, okay, that's a number. What does it look like on the accumulation? Look at that. It's worth more money, right? As a net surrender value. Now, there is a pricing anomaly within this. If we compare the two numbers, so we look at the net surrender value of the protection versus the accumulation. And do we have that in a side-by-side comparison, Jen?
You can see it.
Kinda.
Yeah, you can see it
Yeah.
here.
So what you'll notice in years 2 through 7, the protection products net surrender value is actually a little bit higher than the accumulation product. But the goal of this client is that it's about long-term cash. 10 years, it's 502 versus 543. 15-year cash, it's 884 versus 857, right? So you will always have more money long-term in the accumulation product. And here's the part that was fun. I mean, we didn't know, we were just doing this from, you know what, this sounds like an accumulation sort of a case, not a protection case, but the targets were incredible. They doubled, right? So it went from about 45,000, as you mentioned earlier, to $90,000. And I remember talking with Jeff, the advisor on it, and he was just like, what? Seriously? Yeah. So it's always nice when everybody wins, right? And that is one of the things that we'll do here at E4 is we will help you analyze it, and we take all of those business planning discussions and conversations into account.
Yeah.
And when we can do that, I mean, here's a nice comparison slide. The 10-year and the 15-year cash value differences or cash surrender values. And then, of course, the target difference. So pretty cool.
Yeah, absolutely. I'm going to stop sharing my screen here. And it's just it was a great analysis, Bill, or a great comparison, great case study. And it just shows what a huge difference for everyone it makes, the advisor and the client. And it's just such an excellent example of the power of bringing in a third party point of sale, which I know that you've talked about in other brews as bringing you someone like yourself in as an expert and an unbiased additive to the conversation. And another item that I just like to point out, and I know that you talk about it, and we were probably just not mentioning this for time purposes right now, is that an important part of the conversation as well is living benefits. And I'm specifically talking about LTC and chronic illness riders. It's additional value, it's additional protection. And again, just another reason why it's so important to look at these contracts that were taken out, years ago and look at changes to the clients and needs. So any closing comments before we open it up for
questions? Thank you for that.
questions?
Yeah, I had forgotten about that too. That did become part of the conversation with Jeff. And it's like, oh, by the way, 50% of the death benefit is a free chronic illness rider on this plan. And it's kind of Christmas season, right? So here's an extra gift for you that it just kind of comes along with it, right? Versus the old contract where you could take 85, 90% of your cash value down have your death benefit shrink down, but leave enough cash in there to basically keep the policy performing. These chronic
Yeah,
illness riders, these long-term care riders out there are amazing. So
right. Yeah.
yeah, I guess the other thing I just would mention is that third-party dynamic. If you've seen me on your show before, Jen, I love that. It's what I do all day long. I'm part of a client meeting, the advisor and the client. So instead of them kind of selling something to their client, they are helping their client purchase something if it makes sense.
Hmm.
And that's really my passion of why I do what I do. And everybody at E4, all of my associates and cohorts, if you will, that's the drum that we kind of beat to, if you will. So
Absolutely.
if you're watching this as a recording, you've got a contact with somebody, reach out to them. We are all here to help you.
100%. All right. Well, while we're waiting to see if there's any final questions in the chat box, I'd like to remind everyone that today's brew and our full library are recorded and shared on the brew blog, and that's on our website at www.e4.insurance. And we'll do our giveaway, which I think I forgot to mention at the beginning of the call, that all attendees are in a drawing for a giveaway. Bill, if you could pick a number between 1 and 15.
7 for today, please.
Very good. All right. The winner is JJ. JJ, congratulations. Be on the lookout for a complimentary CE voucher and a Starbucks gift card that will be coming your way from all of us here at E4 Insurance Services. And I'm just going to take a peek in the chat box here to see if there are any questions. And I am not seeing any. So Bill, as always, great to have you on. Great information. Love that case study too. Great job with going through it.
Thanks for inviting me back. We'll see you next time.
Absolutely. We'll have you again. Yes.
All righty. Thank you.
Tune in next Wednesday as we welcome another E4 Insurance Services guest, Steve Walker. Steve, Vice President of Institutional Accounts, will be sharing how to plan efficiently for out-of-pocket spending on healthcare costs in retirement. Thanks everyone for joining. Have a great week, and we will see you next week on The Brew. Thanks everyone.